Today we have young investor Zach on, and he's the first guest on here, so I'm very excited. And we're going to talk about Peak Fintech Group and his other stock picks that I think you guys will find intriguing. So I guess we can get to it. So Zach, can you tell us a little bit about that?
Yep, so right now one of my favourite stock picks is Peak Fintech Group, ticker symbol PKKFF. Peak Fintech Group are a Canadian-based firm operating in China. Basically what they do is they connect small businesses in China with AI-powered lending solutions. There are about 100 million businesses in China right now which struggle to get the lending they need, so Peak's obviously filling a gap in the market. Peak lost about $1.9 million in 2020, lost about 1.3 in 2019. Difference was revenue in 2019 was approximately $11 million. Revenue in 2020 was $40.52 million. And I expect revenue this year to be about $90 to $110 million. And 90 the conservative, 110 pretty much fair, what I'd expect from the company.
And the market cap is like 300 million, right?
Yeah, so 250 million, 260 million right now. I mean, because it's a smaller stock, it doesn't have, tons of people which constantly update the market cap.
And didn't you say it's gonna uplist or something?
Yeah, so basically they're going to be uplisting to the Nasdaq imminently, so in the next few days. They also, on top of that 110 million, they will probably be turning a profit in about Q3, Q4 of this year. And right now they're valued at around $250 million. So when you have that kind of market cap for that kind of growth, in my opinion, it's an extremely cheap stock. Also, with that Nasdaq uplist, you will see the company with the Nasdaq uplist, you'll see the company having institutions buying in. They'll be doing a $15 million raise to institutions to quash any debt troubles. But due to increased volume of institutions wanting to buy into it, I'd expect that to be around $35 to $45 million now. So they can have plenty in cash, with also plans to expand into 6 other countries.
Yeah. And I was looking at Upstart and I saw how most of the revenue comes from one bank or one customer. And so I was wondering is that what Peak Fintech? Because I didn't look at that yet. And also what is the insider ownership for that? Because since the market cap is that low, I like to see huge insider ownership.
Yeah, so basically on terms of kind of Upstart, so Upstart have a slightly different business model to Peak. So their business model is that the bank, say, put their AI into the bank's website and do it that way, instead of doing all of it on their own website. Come to Peak, do it all on their own mobile app, and then they connect them to all the banks. So I mean, with Peak or Upstart, I wouldn't worry about anything like that, because it's just when they, especially with Peak, they're just matching it with a certain business, a certain loan provider. So they don't have a huge amount of any company. They're partners with all the major financial institutions in China, and have recently signed partnerships with JD.com and ShopX.
Yeah, I saw that. It's very interesting. Is there any other stock picks or anything else that you like to tell us about your stock picks?
Yes, I mean, another company I'm in, CleanSpark. CleanSpark is basically a Bitcoin mining play for me. Originally, and they still are, they do these things called microgrids. So microgrids allow the electricity to keep running in a certain place. Let's say when the main power grid goes down, so it can carry on running, and then they obviously take a fee out of that when they sell the microgrids. But CleanSpark recently brought a Bitcoin mining company. So they have been adding Bitcoin mining to this extensively recently. So they aim to get around 9 Bitcoins end of year. So by the end of 2021, you should be getting 9 Bitcoins a day from CleanSpark out of that facility. That's just about over $130 million in revenue at a $40,000 Bitcoin. It's also extremely cheap. And anything under as long as Bitcoin stays over 6,000, they are profitable on every Bitcoin they mine. They have 95% carbon-free Bitcoin. So every Bitcoin won, this 95% carbon-free. So it's not a huge cost to the environment. And they plan to get to around 14 to 15 Bitcoins by the end of 2022.
Yeah, I saw Mr. Wonderful from Shark Tank. He was talking about how I think they mine all their own Bitcoin because they want to make sure it's good for the environment. So I think that's a really cool thing that most people overlook with CleanSpark as well. And I think value is not just the future free cash flows. It's value. Oh, I think Gallo was saying it's just worth. And so I think it makes it worth more when it's from a good place. And for certain people, of course, that's going to be worth more. For certain people, they won't care. Warren Buffett, he probably doesn't care at all. Okay, so who do you look up to? Because I don't think you've ever told us that. For me, it's Galileo, Russell from Hyperchange, of course. So what's yours?
I mean, you got to get him on your shirt at some point, Ma. You know, I'm sure he'd be open to that.
Yeah.
Yeah. I mean, for me, it's the man, you know, the legend, you know, Peter Lynch. I mean, I read all of his books so many times. I love the way he values companies. Another one is one probably nobody watching here will have ever heard of. He's a guy called Sheldon. I can't even pronounce his last name. It's something Interwash. And he runs a company called 3D Capital, which is basically a venture capital firm with about a $40 million market cap. He previously has run Pine Tree Capital, which he took. This is back in around 2000 in the 2000s, and he took Pine Tree Capital. Ran it for about 10 years, 20 years, and he took it from about 25 cents a share to $1,300 per share. So obviously he brought into that a very healthy return, and he's planning to do the exact same thing with 3D. I can't buy the stock personally on my broker, but I love the way he looks at the whole market. His whole concept of 3D is investing in small cap stocks. He's heavy on Peak, he's heavy on lots of other small caps, and the way he looks at the market is that it's always about the lowest possible risk and the highest reward for him. You want to get those companies with a lot of revenue growth year over year, but super small compared to the market cap.
Yeah, I was reading the book 100 Baggers, and they were talking about that like a couple months ago or whatever. And I just like put out a video on TikTok, so ironically about that, like just before this. So yeah, I find it very interesting. And if you could like come back and post that in the comments, because I didn't like hear the name of him. It sounded like he has like a long name or something. So that's your role model. That's very interesting. Okay, like what is your favorite industry in a sector, or is it just like anywhere you find value, you're like happy, or is it like a particular sector or industry that you find like extremely interesting?
I think the biggest sector in terms of value and growth right now is electric vehicles, mainly just
Yeah.
with Tesla. So I feel like you've got a lot of EV specs coming on right now, which are ridiculously overvalued, you know, overhyped compared to something like Tesla. Tesla's trading at, you know, extraordinarily high P ratios on more or less all fronts. But if they can crack the autonomous driving nutshell, the company's got a very bright future ahead of it. If they can really get autonomous level 4, level 5 autonomy for those kind of vehicles, you know, Tesla's going to be a superb company in the future. You know, in the trillions of dollars worth of market cap. So yeah, that I think electric vehicles is the one where you're going to have the most growth at the moment. I mean, I've just invested in the sectors, you know, the companies that I see the real value. I mean, if there's a company, let's say, I don't know, one I was looking at today, my past on, but there's a company called Hated. There's a water company, and basically they're a penny stock, and you know, water's the most boring industry in the entire world, and literally water. That's all they do. But the companies have grown about 8% something over year, had over like 80% of the market cap in revenue.
Yeah, H2O Innovation. I was looking at that company. It seemed kind of interesting. And then there's okay, so like the other companies I've been looking at were of course Upstart, but it looks like Peak is looking better so far, like you said. And also the other company was Cubian. And I was looking back at that one. It seems like a lot of their market cap is in cash and they're growing really fast, but I haven't really looked too deep into it. Probably like 30% finished. But yeah, I think that one's interesting. I'd love to know what you think on that like later when you research it. Also, like what do you like to look at the most when you're like looking at companies? Like what do you find yourself looking at the most?
The thing I like with companies is number one, it's revenue growth. For me, I like investing in these super high revenue growth companies with some strong catalysts ahead. Honestly, it's revenue growth, you know, in terms of revenue for me, profit margins, and then just financials. I don't mind investing in a company which is going to be losing money just for a little bit, as long as they can eventually turn profitability and they've got enough money to be able to, you know, erase those losses and not have any financial problems.
Yeah, I find me kind of looking at the management the most, like because I have a book right here. Like this book 100 Baggers by Chris Mayer. I'm pretty sure you've read it, but anyways, I find myself looking at like qualitative things the most. And so yeah, I find myself especially looking at management. But then I read the book Good to Great, and then it was talking about how from like turnaround plays, it's not so much about huge insider ownership. So it's like different perspectives on that. So then I started looking a little bit less at that, but I think like management is like very important. Also, what do you like as terms of like a business model? Like I like companies that have predictable revenue, or like recurring revenue. It's predictable, but yet can still grow really fast. Whereas Warren Buffett may look at just predictable revenue, like Kroger. Yeah. And I believe Kroger has a jewelry company, and I was like, that's really weird. They're not focused at all on the mission, and they obviously see yeah, they're obviously not focused, and I didn't like that. And I was like, why is Warren Buffett investing in that? But like, so what do you like to look at as far as business models goes?
Yeah, I mean, in terms of business models, I like to see the kind of company where the growth's head ahead of it in terms of the town. They haven't conquered the whole country yet. They haven't got like 800 McDonald's in every single town, every single place. McDonald's here, McDonald's there. I like to see the kind of companies which have a fair bit of growth ahead of them, but also the business model. I like to see a company which is a service somebody needs. I like to have a service which is improving. It's better than somebody else's service, for example, or something which is maybe a bit boring, but let's say they've got a big backlog. There's recurring revenue, as you said. Like see those kind of companies where the revenue is predictable despite growing at a high growth rate.
Yeah, like what industries do you believe will see receive the like most disruption? Because I think that'll like give me a little bit more insight.
Yeah, electric just or the auto industry in general. I think the next 10 years is going to be the biggest change for the auto industry ever, which it'll experience. I also think going kind of in with peak, but not really too much connected, is insurance. I think insurance is one of the most undisrupted industries in the world right now. I don't have any insurance companies directly. I've seen companies like Lemonade, but for me, Lemonade's just a bit sketchy in terms of the revenue growth. That 6% year-over-year growth that one quarter. It's kind of got me away from the company. Another stock which I haven't really done any research in, so I won't. I'm not bullish on it or I'm neutral. Is Metro Mile, ticker symbol Mile. That stock was a SPAC and it went public about 10. You've got people like Mark Cuban in the pipe. I think Tramath might be on the pipe with that one. That's
Yeah.
trading about $747 right now.
Yeah,
Also,
I was looking at that one, and I saw like it seemed like the people who use the products didn't like it, and I stopped looking at it because I was scared of
yeah,
that. And that will be reflected in their gross margins, I believe. But I didn't see their gross margins because, like I said, it was like you said, it's a SPAC. It was a SPAC, and so it wasn't a lot of insight on a lot of like quantitative things, of course.
yeah. And I think it's just insurance is going to be one of the biggest industries. One industry I've got my eye on. I'm not going to say it's going to be a big disruptor because it's still in dust really with any public company right now. It's space. I think space is going to be one of the next big markets in the next 10, 15 years. I think you're going to see people now monetizing space travel, especially SpaceX. I think what Elon's doing over there is absolutely amazing. They're going to have Starlink. So they're going to really have a monopoly. They're going to be sending these satellites up for planet Earth. They're going to be able to send you basically this little box set up in your house. Get full internet range. They basically haven't even got a geofence on it right now. So you can basically take it anywhere. Perfect camping equipment. So you have Wi-Fi with you while you do camping. So I think it's just phenomenal what they're doing with Starlink at SpaceX. The whole thought of sending humans to Mars, colonizing Mars. Well, the human species, I think Mars originally had some problems with in terms of they started to heat up. The planet eventually heat up too much. Water started to disappear, caused all plants to die. That's how really Mars became this, empty planet ball. I just think space is going to be another one of the industries, most prone to getting disrupted.
I actually think like gardening and plants is going to be very intriguing, like hydroponic and things of those sorts. Like right now I have my aloe vera plant like literally right here, and I feel like a lot of different things are going to grow more efficiently and in different ways because a lot of stuff is not necessary. I mean, like app harvest, of course, you can use way less water to grow things and different things like that. Like another one of my passions is gardening, so I feel like that's going to see a lot of disruption. And when I'm like screening literally for companies in that industry and sector, I don't like really see any looks like game changing companies there, other than of course App Harvest.
Yeah,
So I
I
think
mean,
that's
I like App Harvest. I think it's a unique play. The name I just posted was the CEO of 3D Capital, which I was talking about a minute ago.
yeah.
But
See,
I think App Harvest is super interesting because they're going to have like 60x a yield per acre for the company. So they're basically growing tomatoes right now. There's a fair bit of story in it. It's not the company which I would say is going to have the most huge returns in the next few years. I'm a bit in doubt in terms of price to sales, but I do think App Harvest has potential to really conquer the farming market, especially where they're based 70% of the US population within a day's drive. They're very well placed in my opinion. Great CEO. They've got some very experienced people on the board as well. But I think farming, gardening, they're still ripe for disruption in so many of these boring industries.
yeah, I was at Ollie's and I saw Martha Stewart's thing. It was so overpriced though. Also, what are your thoughts on Doge?
Those twins in the moon. Yeah, I think Doge is super interesting. No, I think it's kind of originally kind of a joke. It was meant to be a joke. I've always taken it as a joke, and I know from some of our discussions it was a joke, all the way up. But I think now Elon's getting serious. Elon's getting serious that Dogecoin has some use in terms of transaction power, in terms of if they can get 100x yield down to have it quicker transaction times, less impact on the environment. In Elon's mind, that wins hand down against Bitcoin. I mean, we've seen a lot of negativity from Elon right now on Bitcoin and the environmental impacts. Kind of taken back, kind of surprised that Elon's really this concerned about environmental impact. I'm sure he would have been aware of it before. I think Master of the coin, and as all Tesla shareholders call him, as a joke, but yeah, Master of the coin. I think he's really behind. He's really passionate on cryptocurrency. Apparently, Elon's been working with the Doge devs since 2019. I'm not 100% if the Doge devs can deliver on what Elon wants. I think Elon does want to have his own cryptocurrency, something which he can use for his own use, make it style, build around what he wants to see in a crypto. So it's not what Satoshi Nakamoto would want. It's what he wants. He wants that crypto for exactly what he wants, exact transaction times he wants, to have the more efficiency is what the efficiency which he wants. I mean, any coin which Elon really does take seriously. Elon creates his own coin tomorrow, which has everything he wants in it. Tesla invests in that coin. That coin's going to go to Insta like $10 billion market cap, $5 billion market cap because of Elon's involvement and because of Tesla's involvement.
Yeah, I think like Doge right now is a bet on Elon and Elon's connections and those developers, and I think them working with Elon is going to be amazing. Yeah, that's going to be really good. So I kind of do want to get into Doge, but Dogecoin, but yeah. How old is he?
Yeah.
Aren't you 13?
13, yeah.
Okay. So yeah, that was very interesting, and I'm like really excited about Peak, Upstart, and QB. Those are the only ones I've really been looking at, and yeah, those are the ones I've been looking at. And now somebody just said something about UWMC. I don't know what that is. Probably gonna like look it up really quickly. Do you know what it is?
UWMC?
Yeah.
I mean, I've got a question for you. What companies are you in? I think everyone, kind of wants to know
Oh yeah.
what you're in and what companies you're bullish on.
Discord. Let me go to my Discord. I don't know like offhand, so um I know of course Archimoto, that's my biggest position by far, of course. Let me see the other ones. So I just started Peak like a couple of days ago. I haven't finished the research obviously, but I mean it's like just tracker shares.
Yeah.
I'm 14. But I also own Sprouts Farmers Market, Archimoto. I already said that. Archimoto, Dropbox, Grayscale, Bitcoin Trust, yeah, Sprouts Farmers Market, Tattoo Shelf, and Curiosity Stream. Like Curiosity Stream, I own, but I haven't like done anything with it. I'm not even up to date on that one. But yeah, Tattoo Shelf looks kind of intriguing right now. I think it went to like 15, 16 or so dollars, but I think it's rebounded. So yeah, Tattoo Shelf looks like a company I want to add to. Sprouts Farmers Market as well. But honestly, it seems like those companies all have good reward, but Peak right now is looking really, really good. Like the opportunity benefit is looking much better than some of the ones I'm currently investing into. And so yeah, like though I'm bullish on these companies, there's just some that have tremendous opportunity benefit compared to others. So yeah.
Yeah, I mean, on Archimoto, which I know we're both very bullish on.
Yeah.
I think with Archimoto, when you compare Archimoto's risk-free reward, Peak's risk-free reward, I think Peak really does outweigh, more or less all sides for me personally. If they can reach $880 billion in revenue, it's going to be a far superior company in terms of reward and just the company itself than Archimoto. Long Archimoto, about 7% of my portfolio. I've originally got in six, company at 6, sold half at 12, kind of brought more at 20, but by the time then, Archimoto has been slowly diluted, and I've put more and more money into the market. Other shareholdings have increased in just terms of the a percentage amount of my overall portfolio. But I think with Archimoto, if they can achieve, what they say they're going to achieve, if they can achieve 50,000 vehicles, this could be a $60 stock, $30 stock very soon in the distant future. We've had a lot of short sellers attack the company recently. But then obviously if they can't achieve that 50,000, let's say achieve 10,000 or less, then the company's basically $3 stock. So it's very much risk-free reward of Archimoto. If it all pays off, then the company's going to be a great big gainer. So beautiful speculative play right there. if the company doesn't, if the mark lets us down in a sense, or the company doesn't achieve those amount of vehicles, the stock price is probably fairly valued or in fact overvalued.
Yeah, I feel like they've already priced in a little bit or a good bit of the mass production, but I just recently kind of did a calculation. If they get half of what they say they can do, like 25K units, it still gives a little bit of upside, but not nearly as much for the risk you're taking. So, but it's still upside. So yeah, I think that one it's like binary. So that's kind of a scary one, but Peak looks kind of intriguing the more and more I look into it. And there's this this YouTuber in this group called Stock Fam, and they have like some really good companies, and they're getting microcap CEO interviews and stuff. I think that's very interesting. Because I was trying to look for more opportunities there because I haven't really seen that many opportunities in companies with $10 billion market caps and up, and even just $5 billion market caps and up. And I just want to say, what do you think about like the private markets? I kind of want to get into those, but of course, kind of can't. But I'm like tired of the public markets because I can't really find many things easily, and it's like harder and harder to filter them. Yeah, you get access to the information better, but like filtering them is getting harder and harder.
Yeah, I mean, firstly, shout outs to my good friends over at Stock Fam. I've done an interview with them about a month ago on their channel. For about an hour, we were talking about Peak and all the different other stocks. I'm on the Discord quite often over there. I know the guys very well. Sean K and Hame. So make sure you go check out Stock Farm. Some phenomenal little penny stocks over there. They don't charge. There's no services paid. Peak's been flat for a few months now. Phenomenal community. Stock Farm's brilliant. But what was your question again?
Actually, I kind of forgot. Yeah, I kind of forgot that question, but I think it was like, oh yeah, what do you think about like private markets and stuff?
Private markets, yeah. I think if you're able, your parents can fill in the minimum requirement for those capital markets. If you can technically do a bit of VCing, it's obviously going to be a pretty small amount. If you can do that, I think capital markets are super interesting. It's a bit more democratized here in the UK. You can invest in some of these through different apps such as CDARS, which you invest a minimum of £10, and some other companies. So what things I will say, so once you get something like that, the companies are basically at SPAC valuations. It's kind of ridiculous what they raise at. So I think VCing itself, kind of a bit ridiculous. I think a lot of it's on kind of a story. I mean, I like some of the companies, but I see some of the companies, different companies I was looking at today. Something in the UK which will be uplisting to Nasdaq soon, a company called Node. So they basically are going to be releasing credit cards soon. And the company's got like no revenue. It's at a $50 million market cap. Maybe some potential. I just think a lot of companies deserve to be private, and some companies which are, should be private, and some companies which are private, in a sense, they're still overvalued. But I think if you can find some of the smaller caps, obviously then you've got to go and actually do full-blown paperwork. You can't, if you don't join a syndicate, it's going to be very hard for you to get any kind of deal flow.
Yeah, I want to get a hypergraph.
Yeah, hypergraph. Yeah, I mean, if you can get a hypergraph, that's great. I mean, I think Gally would probably charge a minimum investment.
Yeah.
So I think you've got to keep that in mind. It's probably going to be a few $1,000s, maybe even more of that, 10,000. If he, as you said, he did like a 5 million capital raise, 55 investors. That's like 50 grand, 40, 50, 60 grand each. So right now, unless you have a good amount of capital, VCing is very hard to do.
Yeah, and I agree. Like companies that are pre-revenue, I feel like it would be a better outcome just for not allowing them to go public in any way. Yeah, there may be some really good ones, but not like that. I think, or I don't know. I kind of right now I'm swaying to them not being public in any way. So actually kind of about like how do you find companies? I think that was very interesting because I know like most people ask you about your stock picks, but not really like how you find companies. So is there like any other thing? Because I just asked you what you're like most or the thing you look at the most, but like any other things?
I mean, how to find them? I find them everywhere. Vuzix, which was these really cool VR glasses, so you could use it all VR. I mean, I got recommended that. One of my followers sent me a full-blown write-up on Vuzix. I don't even know who it was now. At $4 a share about a few months back. I never took the call. I mean, and now it's up to 15, hit a high of over 30. And now they kind of been everywhere in terms of PR. I mean, I get stocks all over the place. People are always checking stocks for me to research. There's people who just want me to promote their stocks just so they can get a bit of a pump. And it's always like $10 million penny stocks are like, oh, have a look at this. But I mean, I just look for stocks basically everywhere. I buy the stocks I like. Most of the companies are going to be in a range of around $1 billion, under $1 billion market cap, maybe up to $5 billion, apart from something like Tesla. I mean, looking at my portfolio right now, most of the companies are under $1 billion market cap right now. These are the companies I think have the most potential. I'm not heavily investing in companies under 100 million market cap. I don't have any companies under there. Just because then I feel it starts to get really speculative. It's kind of getting a bit gambling unless it's a super good company.
Did you see SG blocks? Yeah, I believe they're like really close to their book value, I think.
Yeah.
That one's like one of the only good ones under 100 million. But yeah, that one's like I need to go back and look at that again.
Yeah.
Also,
SGBX is pretty interesting. I mean, it's good and bad with the company. I've got a super small stake in it right now. I sold loads a while back. I think around $6 a share. I mean, the only risk I've also said the company has, been to $100 a share before or whatever, 60, whatever
yeah,
it was. Now, obviously, I thought that was originally kind of a reverse split kind of thing. I think the one problem with it is they've had a kind of $100 million backlog before, didn't deliver on it, and the company they basically down to nothing.
yeah,
Now,
like
everyone also stressed with book value. A lot of that book, 30 millions of it's in cash. So 30 millions, the real book value you get. So let's say then I think like 26 million book value, $3 a share. And obviously you get the point where I always look at it this way. If it's going to be in a bankruptcy sale, what's going to be the real amount they get for those assets? That's like the real amount people are actually going to pay in a bankruptcy sale. So, I mean, in a bankruptcy sale, most of these are probably going to be shipping containers, which are in the assets of shipping containers. They haven't used it yet. So these are going to be basically close to worthless, apart from some which might have already been redone. So I'd probably say they've probably got around 16, 18 million in what I would like to call real assets. Real assets you can go to auction, sell off, real assets in a bankruptcy sale. I mean, the company definitely, if they can carry on delivering, carry on getting new facilities, this could definitely be, in my opinion, I don't know, $20 a share, $15 a share in the future. I look at something like Peak, which is already delivering. It's got very minimal risk from past performance. That's just the kind of company I think risk-free reward that adds up to me. I mean, SG blocks is a good risk-free reward, but I'm just super heavy in my core positions right now. I do like SGBX.
yeah, opportunity benefit. What do you think about like a stock group where you like research companies? I think that would be cool. So like you saw or I don't know if you saw my Discord. I was thinking about that, like getting some young investors, and like I haven't seen many young investors interview each other, or yeah, like that. I think that would be very interesting to like really grow the young investor community. That would be cool. What do you think about that?
So kind of growing the whole community, doing one massive stream one time or something.
Yeah,
Yeah, I mean, that's an interesting idea. I think it's just, get more and more kids into kind of stock market. The one thing people always tell me, well, they say what I want. In my opinion, I've got a thing where, look, parents, introduce their kids to the stock market. I say this, if your kid doesn't like it, don't make them do it. I've seen so many people on Twitter be like, oh, I'm, getting my kid to do this, to do that. It's the kind of thing where the worst thing you want for your kid is them having a negative experience in the stock market, having something where their parents are like, do it, and they never did it, and they always get really pushy. That's kind of creating a negative experience. Is to get as many people on board, younger investors who enjoy it. I think it's all about enjoyment. If you can enjoy the stock market and you find it fun, then I really want to build that community.
yeah. I was like trying to force my sister to do it. I was like, I'm gonna do all your chores for you if you do it. But she just likes to play Roblox. Oh, and about that, like, do you have any gaming plays?
No gaming plays right now. I mean, Roblox is a bit overvalued in my opinion, a fair bit. I think
Yeah,
the company's up what's it, $75.91 a share. Last time I did a bit of research onto it, it seemed pretty overvalued. And I think the revenues aren't going to have a huge amount to go for the company. They did have some fantastic watch time hours up in the recent quarter, which is good. I mean, it's not like Roblox. I've seen how much Roblox costs when my brother shows me. I mean, they're making a killing out of that kind of game. I mean, I like the concept. It's kind of like Ethereum in a sense, people building on top of it. And people are
yeah,
building on top of the original Roblox concept. The original Roblox concept of being able to just play a game. Developers, people are building on all top of this. There are hundreds of thousands of people playing games at once on the platform. Millions of people, millions of watch time hours every single month. I think
yeah,
a company like that, they got so many smart people on that game, developing it and doing what they want with it. At the same time, I would say you're always limited to a certain age category just about who the games are focused towards. Roblox is very heavily centered towards, I'd say, the main audience, which is about eight and under, maybe 9. But once you get to 10, then I think you start pushing it in terms of the audience. But honestly, I like Roblox the company. I think they're making an absolute killing out of what they do.
Yeah, like
Also,
I
I need
know.
to do more research into it.
Yeah, me too. I haven't like looked at it in a while. So also I know this person in my class. He owns a Roblox game. He developed one. It's called Restaurant Tycoon. Probably should ask him a little bit more about that. And honestly, I would want to buy. I like kind of want to buy this stuff. Just looking at my sister. She plays it all day. It's like if everyone in the world is like this, or majority of the kids are like this, I don't see how they won't find a way to make money from it. Like, do they need a new CEO or something? I like haven't looked into the management and the executives and stuff, but like,
Management's good.
hmm?
I think the management's good. They've been with the company for a while now.
Yeah.
Yeah, I think it's good management.
Are
Really
they
good.
profitable? Because I don't even know that yet.
Yeah, they are profitable. They're very profitable. I mean, say the profitable business model, whole concept of it. You're giving it to developers to do what they want with it. Then you're taking your fee out of it. I mean, developers right now get paid. Obviously, I did a bit of research into Roblox, but basically, investors get paid. So if you create a game, you get paid in Robux by Roblox. You become a developer. So that means then you can withdraw that Robux and have it in physical cash sent to your bank account. So I think it's something for every 1,000, you might get like 1 Robux, a few Robux. But then you get to kind of games that they charge Robux. You get companies, games which have hundreds of thousands of players every minute. Games I see my little brother, my little 10-year-old brother, he plays this game called Brookhaven. So he showed me it the other week. That's kind of interesting. So that's just whole kind of role play kind of city game. And there's another game called Bloxburg. So Bloxburg's kind of the rip-off.
Oh, yeah.
Yeah, he showed me Bloxburg the other day. So that seems like a bit of a rip-off of
That's what my
Brookhaven.
sister plays the whole time. Like,
Yeah, it's like
houses.
thing is with. I mean, kids spend so much money on those games. It's kind of
I
crazy.
know it's a waste of money. I'm like, why do you do that?
Invest it.
Yes.
Make more money on your returns. But I think Roblox is so interesting just as a company and platform. If this valuation was a lot cheaper, I'd buy it.
Yeah. It's a really good company. And that's what I'm finding. Like a lot of great companies just like not at good valuations. And I haven't really been in a bear market. I think both of us haven't as we just recently started investing. I wonder like how we'll do in a bear market if we like actually stick to investing and remembering price is what you pay, value is what you get. I think I'm waiting for a bear market. Like when is it gonna happen? Because it's getting harder and harder in my opinion, kind of.
Yeah, I mean, I look at some of the stocks now. I think there's so many opportunities out there. I mean, take Coinbase. I think Coinbase is undervalued personally. I mean, what are they coming out now? So there's a website called Asset Dash. When you go on there, it gives you a live stock ticker price. So right now the company's at a $60 billion market cap. They made 1.8 billion in Q1. Slightly worried about the
Wait,
rest.
they're at a $44 billion market cap. It looks like now.
Yeah, but I'm on one which I'm pretty sure updates every minute. But maybe if it's at 40, that's even better. I mean, 1.8 times 4. Do the math for yourself. I think you're about around 7.4. Yes, no. So 1.8 times. Yeah, so around 7.8 billion dollars in revenue if revenue stays flat. Company's at 60 billion. Insanely profitable. The only thing is I'm slightly unsure about how it's going to be affected in a recent one. You're going to have way more volatility in kind of terms of trading. But you've got to remember, as the price of the asset goes down, Coinbase take the same fee, which is about 3%. But they take less as the price goes down, because obviously that 3% is worth less and less and less and less. So at 60, that 3% might be worth, I don't know, whatever you're purchasing, $5. At 40, that might be worth $3. Now, 10, it's going to be worth like $1. Just got to keep in mind, they are highly reliant on the price of Bitcoin as well. But I mean,
Yeah.
I do like Coinbase. I think Coinbase is a tech company. I think they've been beaten down by direct listing because now insiders can basically sell unlimited. But I definitely think there's opportunities out there. Undervalued companies like CleanSpark, 150 million in cash, possibly 130, 140 million in revenue in 2022 at least, 500 million market cap. Peak basically going to have half the market cap in revenue, just under. And I think those kind of companies are, the stocks which will have, big potential in the future. Especially Peak. I mean,
Yeah.
110 million 2021 revenue, over 100% year-over-year growth, 250 million market cap, 6 other countries, a small fintech play. in China. You don't have many of them, and then they are also doing this thing called the digital yen. So China's government banned all cryptocurrencies recently, apart from some of their own cryptocurrencies. One of them, the Chinese yen. So this is their version of a cryptocurrency, the Chinese yen, which they're launching all online. Doesn't exist, but basically they've adopted that now. Peak. And I mean, you could see some of these, partnerships with JD.com, ShopX. I mean, there are definitely opportunities out there.
And yeah, ShopX is like Shopify, right?
Yeah, so ShopX is another company. It's one of the leading e-commerce brands in China, along with JD.com.
Oh, yeah, I saw that one. So Peak is very interesting. I'm gonna like really have to finish this.
Yeah.
On it.
I mean, talking about you for a minute. So just tell us about some of your stocks that you own. Some of your opportunities out there which you think about.
Okay, so the companies I own, of course, is Arc and Modem. I think I've talked enough about that. Dropbox, I've talked enough.
What about Sprouts Farmers Market? I haven't done any research.
Sprouts Farmers Market, I can talk about that one. Like,
I haven't done any research into that, so you got to tell me a bit about Sprouts Farmers Market.
Okay, this is not a growth company. It's more like a Warren Buffett company. It's a company that's not growing pretty much, or it's not growing like definitely not like Peak. It's profitable, very profitable, great earnings yield, great free cash flow yield. The thing is, people don't want to invest into it because mostly it's really just that they think that that Whole Foods is going to disrupt it. But I feel like they're in different places. I mean, my aunt goes there. She goes to Target, but like she's starting to go more to Sprouts Farmers Market, and it's because health issues and things of those sorts. And so in Sprouts Farmers Market is like kind of a cheaper version of Whole Foods. And I've also went into Whole Foods, of course, multiple times, but it's just a great experience. I've only been to Sprouts Farmers Market probably about 4 or so times, or like a handful of times. But the thing is, I remember that I had a great time there. Like, I believe, I don't know for sure, but I believe they have these things where you can like get a package and you can go and cook it and it's like really fresh. Now the thing with Sprouts, I believe, is they don't have a lot of their own brands. It's mostly other brands, but they're really just trying to be more efficient. They're trying to have more and fresh foods. They donate a lot. It's like a really good social cause. I believe they trade at like 8 or 7 or so times free cash flow. It's like really cheap, and I believe they're growing revenue double digits. Or I probably have to go back at that. I have my presentations on Google Slides, but yeah, I probably should go see that. But yeah, it's like really good fundamentally growing. I think the only thing that hasn't really been growing is their operating margin. But everything else has really just been growing. And I feel like I think they had a lot of institutional ownership. So it's like a lot of institutions, but they're having share buyback plans in place. They've been buying back shares, literally giving you value by just sitting there and doing nothing. Like, you make money in waiting. Well, you really make money in waiting with that company. But honestly, it's not going to be better than Peak. So you're probably not going to want to invest in this company. Yeah, I sold some of it to go into Peak because I saw enough to know that it's going to do better than Peak. Probably need to do a video on it, but I don't want to do one until I know pretty much everything about Peak. But yeah, I'm extremely bullish on Sprouts Farmers Market. It's like pretty much nothing bad except for that operating margin. And literally since 2014, since all the hype with Whole Foods and companies in this sort, it has just been going down extremely. And the short interest is it's kind of high too, at like 15%. And I don't know why, because like I said, free cash flow is going up. Oh yeah, but I do expect the free cash flow to go kind of down this year, of course, because of 2020 and that like outlier year. But after that, we should see a smooth road upwards, and it should. Oh yeah, the payback time for this company. I mean, I just read that book like a month or so ago. Payback time by, I think it was Phil Town. I don't know. But it's really amazing. And they say like the payback time was like 7 or 8. So it looks really amazing. And I just found out about the Rule 1 investing, or like 2 months or so ago. I found out about the Rule 1 investing website, and it's like really good. I feel like they're really good at valuing companies. It's by Phil Town. It's kind of out of date, but it's like really good. So definitely recommend that website. And I recommend people who don't like to take, or I don't even think Peak is much of a risk. But so I was going to say people who don't like risk to invest in this company, but no. Peak is probably better.
I mean, yeah, it's all about doing your own opinion. I think there's just so many fantastic companies out there. Peak almost half of market cap in revenue. Then you're going to have, on top of that, half of market cap on revenue, profitability, Q3, Q4, expansion in 6 other countries. You've got Sprouts Farm Market, as you just talked about. I haven't done any research into it. That seems like a pretty stable company, double-digit growth, and improving in those margins. I think there are just so many fantastic opportunities out there right now. And we've seen the correction. I think 2021 is the year for the long-term investor, the investor who's willing to pick up these stocks, these cryptocurrencies, Ethereum, Bitcoin, or Peak, whatever company you may want, at these really cheap prices. And I think long-term, this will serve you better than being in a complete bull market run.
Yeah, and I kind of like prefer companies that are growing though. Well, I prefer companies that are not growing because they're easier to value sometimes, but sometimes I prefer those companies that are growing a lot because those are the companies that a lot of people are not going to be able to value, and they're going to like say, "Oh my gosh, it's overvalued," because they can't value it, of course. And so I think those are the companies I probably need to make sure I like look at more and more, because those are going to be where you're going to see like disconnections in the market, and where the market is not efficiently or properly valuing them because of that. And also a couple more notes on it. I just got the slide on my phone. So like they're very efficient with capital. The return on assets, or this was a slide I made a couple like months or so ago, but the return on assets is really good. It's above 5%, like 9%. The return on equity is about 40%. Like it's a classic Warren Buffett company. Just Warren Buffett is in Kroger, which is not even focused. I mean, their CEO is recently kind of new, and he literally did a TED talk on food. It was kind of funny, but yeah. So he's very passionate. I mean, the insider ownership is not a lot, but like I said, I feel like this is kind of a turnaround play as far as Sprouts Farmers Market goes. I feel like it's a turnaround play. I mean, they've got new management and they're doing better things. They've uploaded, or not uploaded, but kind of like stopped these weird not newsletters, but like those things you get in the mail with all the coupons and stuff. They digitized that, so they're implementing technology to accelerate their flywheel to do better and become more efficient. And the gross profit margin is around or so 40%. The net margin is about 5%. Remember the industry they're in, but honestly, the industry they're in, and those margins are going to be a little bit lower. It's not a software company, but they are implementing technologies, of course. But compared to other companies, these margins are pretty good. And like, here's a video that what's his name? Andrew Latender. He's great at valuing companies. He's like a great investor. He said that historically the S&P 500 has grown earnings anywhere from 6 to 10% per year, and has traded anywhere from a 15 to 20 price to earnings ratio. This company should be trading at a 15 to 20 price to earnings ratio. It's just so crazy. And so it's like probably the easiest ones to know that it's gonna, other than peak, of course, to know that it's gonna go up. But yeah. So that's very interesting. And then, like, you know how in the book they say great stocks often, or 100 baggers, great stocks often offer extensive periods during which to buy them, by the book 100 baggers. This one has offered extensive periods to buy it. Arcimoto has offered extensive periods to buy it. Peak has offered extensive periods to buy it. You see a lot of consolidation, and that's like, it's going to really build it up for a ramp of like stock price. The stock price is going to ramp up in a short period of time. With all the consolidation, it's just going to go up in a short period of time. Especially with short interest, those are the type of things that happen. I kind of want to rant, but yeah, I'm very bullish on the company.
Yeah, I mean, there's just so many fascinating companies out right now, and I think if you're just willing to look, you're willing to do the effort. I mean, you don't want to do the effort. Let's just say you don't have paper hands, and you could hold for a few years. Put it in S&P 500 ETF. Put in something strong. I mean, put in bonds, even if you really have to. I see Maya. I see Mr. Michael is out there right now talking about his favorite Palantir. He's 90% Palantir. So
what?
he loves it. The one my man who was doing it with yesterday, he loves his Palantir.
I saw his Twitter profile with all of his companies.
Yeah, he's like all in Palantir.
Oh, and he likes tattoo shop too, which is great. My thoughts on Palantir, I haven't really researched it, honestly. It probably should, but yeah, I haven't really researched it. It seems like, I think the management is really good, according to what I hear, but that's a good thing for me. But yeah, the company I think just went public or whatever, so I would like to kind of see how it's going to trend or whatever. Yeah, I don't usually invest in companies that just went public, but with the SPACs I did, but not as much anymore.
Yeah, I mean, Palantir went public on September 2020. funny enough, I decided to buy the stock as a little fun day opening swing trade for the IPO. Sold it, and that was at $9.
Oh my gosh.
And the stock went up to 20 afterwards.
You did that with Neo too, right?
Yeah, I brought Neo at $10. And I held it to 30, so that was a pretty good trade in there.
But I mean, with Lucid Motors, at least you sold that one. But like before everything happened.
35. I sold. Wait, what did I sell CCIV at? I mean, CCIV. I did a thing. I mean, I don't think there's any more companies to really do it. But I used to buy every single hot SPAC rumor.
Me too.
It's any single EV company which is hype. This was a Rivian. Arrival. I bought Arrival at 1080 first day of rumors. It announced the merger the day after that. The stock went up to $20, and I sold. I mean, I used to do that, but there's not really any more EV companies left now. But Lucid was like the next one, the last one for me, which I was ever going to do. So what did I brought? I brought the stock at 12.18 CCIV. What did I buy? About 6 shares that day. Bought another one, and I sold them at around $35. So very healthy, just over a 200% profit on each one of those stocks. Got a bit greedy, could have sold at 60. Thought it was going to go higher when the announcement came, and the stock is going to be valued way more highly than people thought. Pipe was going to be at 15, not 10. So I mean, then the stock kind of went from the chart, they got crushed. But I mean, my only concern was I do have concerns with CCIV long term. But yeah, I've been in so many stocks.
Yeah, I was in Morristown Motors. That was like horrible. But I sold, I think it was for a loss, but not nearly like $9 or so. It was like at least I recognized it was a mistake. Like what Gally's been saying, everyone's been saying, like when the facts change, I changed. And so I changed and I sold out of that really fast, which was good. So what is Michael saying? Over 100 hours of research on Palantir?
This guy's crazy. That's all he thinks about is Palantir.
That's good though. Keep researching.
Lordstown Motors. I've got my own special nickname for it, Fraudstown Motors. I mean, I had to say I love the name from Lordstown. I just changed it to Fraudstown. I mean, honestly, the allegations on Lordstown could prove not to be true. Some of it. There's definitely truth in it. Steve Burns definitely misled investors. I've been out Lordstown for months in $20. I was trading in and out of it. But if these allegations are nowhere nearly, they can get production up and running. They've got a plan. This stock could be a $15 stock in the future. If they can deliver, they've definitely got a market of over 100,000 pre-orders of different companies. It seems slightly dodgy. It seems like they may have been paying companies. If they can get a quarter of what they say they can get in pre-orders, they can fill up that first year of production, which are over 3x up on pre-orders. I mean, not long Lordstown. Don't like the company at all, but there's definitely, it's kind of like Arkham in the one sense where if they can do production, Lordstown Motors, this company could really go to the moon, and just like Arkham.
Yeah, and the fact they had Joe Burrow, so of course I live in Louisiana, so I know Joe Burrow and stuff, and I was like, in my opinion, when I was watching him play football, he's a level 5 leader. He's a quarterback like for LSU. And he had like straight A's, and he was really good at football and did amazing. I was like, okay, this looks like somebody's like, whatever he's gonna do it good and do it to the best of his abilities. So for him to like be partnering with them, I was like, maybe he sees something in the management that's really amazing. So I was like, okay, so I don't think anything is going to be really bad about the management, even though they seemed a little like too prideful and a little bit not humble enough. So I felt like that, but honestly, right now, I probably wouldn't invest in it, or that's why I'm not invested in it anymore.
Yeah,
like what I'm seeing right now, it's like extreme allegations. So yeah, it's scary. I'd rather invest in Arcimoto.
Yeah, I'm not a fan of management over at Lordstown. I mean, Steve Burns, the guy hasn't exactly got a impressive track record. He founded Workhorse. Workhorse make like £9 a quarter. A little bit overhyped for this contract. I mean, I was in Lordstown Disclosure in the $18 range for about, I sold 6 months ago, or 5 months ago I sold out. I sold around October. I was selling out in 2020. And I sold about last 2 of my shares in March of this year. I mean, I just think this no. So I sold in December, and when they had the stock crash, I brought just to see if it could have a bit of a bounce back workhorse. I mean, Steve Burns, he's just the kind of guy where honestly he's not exactly founded Workhorse. He apparently sacked from Workhorse. He's gone to found Lordstown Motors. I'm really not confident in the management over there. Maybe they got something. They've got a fair bit in cash in their factory.
Yeah. It looks like Matthew's talking about this company he told you about, UiPath. Um, Expensive stock. Okay. Thanks for the recommendation, and also thanks Tyler for sharing this. So yeah, I think this has been very interesting. I mean, if like you could recommend one thing, like what would you recommend? Also, what book would you recommend if you could recommend one book?
Yeah, I mean, not a financial advisor, nothing we say is financial advice as always, but, one of my stock my most bullish on right now is Peak. I just think it's always about long-term investing, no matter what stock you buy. You just gotta have conviction, hodl, hodl your stock with those diamond hands, and hopefully you'll make some good returns.
Yeah, Elon Musk has diamond hands.
Diamond hands. Tesla's got diamond hands.
Yeah. Yeah, Elon Musk is amazing. I don't know why they hate on him so much, but yeah, I'm so excited, and I can't wait for Archimonal's next call. Hint, hint. Thanks so much for joining, and I'm looking forward to seeing you on other people's podcasts and stuff. Like, you have a lot of good information, and that's why I want to have you on as well. Thanks so much, and see you later.